The following is a presentation of TFNN. The Tom O'Brien Show is produced every business day. Tom takes your phone calls toll free at 1-877-927-6648. Internationally at 727-445-1044.
Let's go to Marty in Worcester, Mass. Hey, Marty, what's going on?
Hi, Mr. O'Brien. Got a quick little thing here.
Yeah?
It's called patience and perseverance.
Okay.
Patience. I heard a goddess yelling, the magic silent word, and methinks I must be smelling pokey money round the world. Perseverance. When markets roil like stormy seas, good traders seek safe port. In financial times like these, you need Tom O'Brien's gold report.
You are too much, Marty, man. That is so cool. Well, listen, man, I really appreciate that.
Now, Tom O'Brien.
Good afternoon from TFNN. Welcome to the April 20th magnificent Monday edition of today's Closing Bell on the Tom O'Brien Show. I'm your host, Steve Perseverance Rhodes, who absolutely knows that each of us should always be pioneers of our future versus prisoners of our past. Hope each and every one of you is having a magnificent Monday. Let's make sure that we have an extraordinary evening. Of course, the easiest way to do that is to always remember that life happens for us, not to us. That's right. Little 2x4 shift out there is all the difference in the world because it means you and I can find the gift in every set of circumstance that life is going to toss at us. We're going to go look at the circumstances of the markets today. We've got the Dow up 225 points. S&P is up 21. But most importantly, what I want you to know is I'm grateful for your presence here. Now, I'm here to serve you. So feel free to pick up that phone, dial on in at 800-877. Now, don't dial the 800 number. You won't get anybody to answer. But if you do dial 877-927-6648, we'll definitely answer that call. Or 727-445-1044. This is magnificent, magical, marvelous Monday, of course. It's none other than Tiger Financials Network. I'm Steve Rhodes. Welcome to the show. As I mentioned, the Dow trading up 224 points right now. She's trading at 18,051. The S&P is up 21 points at 2102. Composite up 64 points at 49.95. Russell 2000 up 12 points. That's trading at 1263. Gold is back $8 and change, trading $11.94.50. Silver back 31 cents at $15.91. Light sweet crude is up double nickels, 55 cents, trading out at 56.29. Leading the charge dollar-wise to the upside, it is amazing. Amazon.com. It's trading up $13.71, up 3.5%, trading out at 389.27. 3.2 million shares behind its move today. Google up about $11, 1.3 million shares behind its move. Intuitive Surgical up $11 and change, up 2%. You've got Intercept Pharmaceuticals up $8. Hasbro up $8. To the downside, been leading the charge all day off 25%, down $15 with 1.7 million in shares to the downside. Faro Technologies, F-A-R-O is the ticker symbol. Juno Therapeutics down $7 and change. Kite Pharmaceuticals off $7. Royal Caribbean Cruise Lines down $6. So where do we begin? I believe we begin, each and every day these markets are changing. And if you take a look at Friday's action, it had meaning. We take a look at today's action, it has meaning. Now, the market does not close for another 41 minutes out here. So in 41 minutes, it could give us a totally different message than the message that we're going to go take a look at right now. But what we have to do is we've got to be present. It's all about being able to be present in the moment. It's not about what took place a minute ago. It's not about what's going to take place a minute from now. It's that's taking place as we speak right now. So let's go take a look at the S&P. Well, let's go take a look at the New York Stock Exchange. We're going to start with the wider swath of the market because the New York Stock Exchange is giving us really good signals about whether to be long or short. That's if you are utilizing a daily chart to make those decisions. If you're using a 30-minute chart, you're going to get totally different decision-making process. If you're using a weekly chart, a totally different decision-making, a decision tree out there. But let's take a look at the summation index. price oscillators. Summation index the McClellan summation index is a tool that helps us to understand a trend. Now, it's not going to sell the top tick. It's not going to sell or buy the bottom tick out here. But it's a really good way, an analytical tool of being able to understand the trend that's out here. Now, Friday's price action took all of the price oscillators down below zero. Specifically, we take a look at the New York Stock Exchange, which was also the price oscillator that was giving us the largest indication that the market needed to have some type of correction out there. If we take a look at that, if you're looking at the bottom portion of my screen out here, the very bottom portion of my screen, you'll see what's referred to as the price oscillator tool. The green horizontal line going across my screen, that's the zero line. That is like the umpire, okay? Picture yourself at a baseball game. That's like the umpire who gets to tell you, who's up, who's out, which team is going to be on the field. Let's assume that those are the rules of the game. This is not baseball where you got 3 outs and you're out. We're going to just simply use that price oscillator to determine whether it's the Bulls or whether it's the Bears that are pitching. Okay, and at this stage here, if we take a look at the price oscillator, the key is that zero level, that green horizontal line going across my screen. When the price oscillator is below zero, which it got to on Friday, it sells that the sellers are the ones that are throwing the pitches. Well, the sellers may be off of the field here if we see that price oscillator get above zero. If we take in all that was needed today in order for that to occur, you'd think I have that etched in my memory. 1,280 issues, 1,280 issues or more, net advancing issues, and the buyers are the ones that take back control of the market. Now, the interesting thing here is we've got a couple of competing patterns no matter what happens. On Friday, let me try to blow this up for you on my screen out here. Hopefully you're following along with us on Tiger TV. On Friday, we had what's referred to as an island top reversal. Now, an island top reversal is or can be one of the most bearish patterns that is out there. Now, the market's role, the buyers and sellers, their role for you and I each day is to go out and paint signs. They do that through Japanese candlestick charting. Now, island top reversals or bottom, that's not a Japanese candlestick. It's a Western tool out here. And if we go to, and they're very hard to form. What's required is you've got to have a gap up. As an example here, that took place on April the 15th. And that gap, that means the low of that session on April 15th can't really touch the prior day being April 14th, the high of which was 11,117. Then it doesn't have to be the next day. Sometimes these islands form over a period of days, maybe even weeks out here. Sometimes just one day. Well, in the case of the New York Stock Exchange, it was a 2-day island on the trading session of April 16th and a doji candle. Does that mean anything? At resistance, it means a whole lot. Does the mere fact that it happened and we had a island reversal top mean anything more than just an island reversal top? Absolutely not. Doesn't mean anything. Now, here's the deal. Because those are the most bearish type patterns, let me show you a bunch of them that are out here. Here's the island top that we're taking a look at. Now, today, price got up into that island, so it was able to get back there and really rescue some passengers. Typically, an island top, once it forms, boom, it's off to the downside out there. You see momentum. In fact, it's just like watching a baseball game, a hockey game, a football game. Momentum is everything, right? Well, momentum for the sellers at this stage right now at 314, it's winning on them totally losing that momentum, losing the ball, having the buyers get back on the field out here to do their thing. Of course, you might think the guys that are batting, if we're taking a look at the baseball game, that's the preferred level to play at. I'm just using a metaphor out here, so maybe it helps you picture things a little differently. In this case here, the ship was able to get back and rescue some passengers and that means the gap in essence is, for the most part, closed out there. Really, in order to close that gap, in order for a resistance line to fail, what you need to see is a close with the body of the candle. And I don't know that we're going to get that today or not, but this is what you would be looking for, a close inside of 11,134.03. Right now, price is trading at 11,124. If you do see price close in there, what that tells you and I is that island reversal top has failed. Now, the reason to spend so much time there is because there is nothing more bullish than a failed bearish pattern, and that's what we would have here. In fact, if you're looking at the New York Stock Exchange, let me show you some other island reversals out here. We'll just kind of pull this off to the side. I went back through and marked a bunch of them for you. Here's another island top that formed back in May 12th. This was a three-session island. That was May 12th, May 13th, and May 14th. We had a slight gap up between the 9th and the 12th, and we had a gap down in between the session of, and we could use either the bottom of the 12th and the top of the 15th. Very small, very narrow, doesn't matter. Was still an island top. Once it failed, what happened? Price went up and went ahead and made an A to B equals CD to the upside out there. Now, when they fail, it doesn't tell you where prices are going to head to, but it does tell you that prices are not going to head lower. When the most bearish of patterns fails, it really tells you that who is in control are the buyers out there. We don't have that yet today. We might have that in 44 minutes from now. If we take this back, here's another island top inside of the New York Stock Exchange. This one took between the time period of December 23rd and January 23rd, 2014 to form. And when it formed and price moved down, and it looks like a retracement here. A retracement from the low of, made about a 0.618, almost a 0.786 retracement. That was off of the lows here from October 9th, back in 2013. This is Steve Rhodes filling in for Tom O'Brien. We get back. Let's go take a look at some other islands out there. Give us a call, folks. Be right back.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. You take a hands-on approach to managing your investments, and whether you're bullish or bearish on Chinese stocks, the ETFs from Direction Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foresight Fund Services, LLC.
Trade with confidence and clarity while using the software that thousands of institutional traders rely on to make the best and most accurate decisions. Choose from 1,000 equities, currencies, and futures instruments utilizing the TAS architecture. As seen on Bloomberg terminals worldwide, the TAS Profile Scanner is a benchmark technical filtering system that thousands of traders rely on, and now you can too. For a limited time for TFNN subscribers only, we've reduced the price to just $97. That's over 75% off. John Logan hosted a special subscriber-only webinar in December, and you'll gain access to that archive as well, so you can learn exactly what the TAS Profile Scanner can do for you. Try this product out. No matter what you trade, the TAS Profile Scanner can help you make more informed trading decisions. There's no obligation to pay anything. Don't let this offer pass you by. Get your 30-day free trial to the TAS Profile Scanner today by signing up at TFNN.com. Tom takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back to the Tom O'Brien Show, folks. I'm your guest host, Steve Rhodes, filling in for Tom for the evening. Right now, we've got the Dow up 226, S&P up 21. Let's go back to the New York Stock Exchange here just for a moment. We've got another 39 minutes left in the trading sessions. Because it's really all about pattern recognition. The key, when I take a look at, we're taking a look at all the different tools that I like to utilize to help us understand what's going on inside the markets, because the markets are always communicating to us. It's just up to you and I to be able to take in that information. And these island tops / island bottoms are really important. Now, typically, if you go back here in the time period as an example, June 20th, 2013, all the way through July 5th, 2013, New York Stock Exchange formed a real nice island bottom. Now, this behaved the way that it typically does. Once those patterns form, then it's time to take off. And that's exactly what the market did. In fact, the market really never looked back into that island inside the New York Stock Exchange that formed over there. Unlike the island tops that we've taken a look at that each have failed, once they've failed, price has resumed higher. And that's what you would expect this time around as well. We don't have a complete failure just yet. We'll just have to see how the day closes. But there are, in fact, since 2009, that's where we have seen inside the NYSE all the island top and bottom patterns out here. In fact, if you go back, this is how powerful they can be. June 1st, 2012, we had a 3-candle session island bottom. Market never looked back from that. In fact, it was followed up with 2 other island bottoms out here. One between the time period here of July 23rd, 2012 through July 25th, and then a single one island bottom out there that occurred August 2nd, 2012. Market, once that occurred, the market just simply took off topside. Likewise, on Friday, based upon that candle formation, if things were really bearish out there, the market would have taken off to the downside. That is not what has taken place as we speak right now. And if we do see price get above the high of Friday, what you can expect is the completion of a pattern. Now, the key here's why the New York Stock Exchange is struggling. Let me show you over the course of a long term. I put a monthly chart up on my screen of the NYSE. And we're focused a bit on this right now, but it'll give you a great perspective as to what is and what is not going on. So you've got an island top that formed up at a resistance level, a real key area of resistance inside the New York Stock Exchange. We've got the monthly chart up on my screen. Yeah, it's only April the 20th out here, but this shows you how important this level that the NYSE is trying to get over, this 11,227 area. Now, we've seen an intra-month high. The actual high so far this month has been 11,203 versus 11,227. That's really close. These red horizontal lines, the thick ones, not the dashes or dots that are on my screen out here, these are the areas of resistance, horizontal trading range boundary lines. They become significant areas of resistance, and once price gets above it, comes back and tests it, real significant areas of support out there. So in the case of the New York Stock Exchange, not only if in fact it closes above that island top, it'll also close above, or should close above, this next area of resistance inside the NYSE. If you see that happen, if I see that happen, if we see that happen, what that means is that price will make its way up to 11,994 and then 12,761. That's what's going on inside of the New York Stock Exchange as we speak. If we go back and we take a look at the summation index for the NASDAQ Composite. Now, in the case of the NASDAQ Composite, it needed 829 net advancing issues today to get above the zero line. Right now, it's just slightly above it. It's got a reading of plus 2.41. That means we're probably about 900 or so net advancing issues on it. If we see that, it says that the sellers just absolutely lost control. Now, what does that mean? It means in the case of the NASDAQ composite, then it ought to get up and test the 50-20 level. That's a swing point for March 20th. Maybe even try to catapult that. If I go back and we take a look at that long-term chart, that was the NYSE we looked at. Now let's go look at the NASDAQ composite, COMPQ out here. Take a look at its monthly chart patterns. You're going to also see that this is up against a resistance level. So, the market since January 2nd, when we came back in 2015, it's basically gone nowhere. Now, as of Friday, the Dow had only gone up or down. I can't remember if it was up or down 3 points. Today's 220 some odd point move, but we've seen these 200 point moves here in the NASDAQ composite. These markets are going to move higher, which I believe they are. We're at a very favorable seasonal cycle. So I believe that the markets are going to move higher. But here's the deal. We've got these lines of resistance, pattern recognition, lines of resistance that both you and I, it doesn't matter what we believe about the market, what we believe about the economy, what we believe about, all we need to know is that what you and I want to become, to be successful at anything in life, is a pattern recognition specialist. And with regard to horizontal trading ranges, if in fact the NASDAQ composite is able to get above 5,083, that will tell you, both you and I, that not only will it go test its highs from back in March of 2000, it'll go ahead and take out those highs and likely hit up to 54, 57, most likely 58.31 as its next level before it provides us with any real significant piece of information out there. Now, with regard to pattern recognition, I'm glad you brought that up. Most people, when I get emails from folks all the time, and thank you to each and every one of you that send me an email out there, one of the common questions I get, people will say is, where the heck do you get your energy from? Are you always like that? And the answer to that is yes. Now, when it comes to, I'm impassioned about what it is that I do. Just think about the things that you really love to do. I get to do the thing, one of the things that I love the most. I say one of the things because one of the other things I love to do the most is not just about pattern recognition on a stock chart. It's about human pattern recognition. So what I'm going to do, we have not done this here before at TFNN. I'm going to hold a two-part workshop. I'm going to do a two-part workshop on May 7th and May 14th. Everyone can attend. It's a two-part workshop. All my newsletter subscribers, they get to attend for free. You don't have to become a newsletter subscriber. You can attend as well. It's $97 for two workshops, two 45-minute workshops, and it's going to be on human pattern recognition. I will teach you the tools that you'll be able to use both in trading. There's every now and then people hear me use an expression, knowing what to do and doing what you know are two totally different things. Think about it as you apply that to your life, as you apply that to trading and investing. So this is going to be a workshop about the psychology of trading. That's not just about how you can utilize these tools that I share with you. These are going to be strategies that you'll be able to use and apply them to every single area of your life. It's going to be the coolest workshop because of the information I'm going to be able to share. Then be able to share with you, the seven areas of life that truly control your decision-making process out there. So I will talk more about it during the shows today, during my shows, if you listen to me from 9 to 11. But I want you to come over to the homepage of TFNN.com. The psychology of trading is going to be a two-part webinar, $97, less than $100. It's going to be an extraordinary. And if you can't be there on May 7th, it's going to be between, I think it's 6:30 and 7:50, from 6:30 to 7:15 each of those nights. If you can't be there live, that's no problem. You'll get the access to the archive on your members page out there. And it's not just enough to be able to pick out the patterns here that we see and then being able to take decisions and be able to take action. You really need to understand the psychology of what goes on in between our heads. Trading and investing, it's about, 80% psychological and the other 20%? That's right. It's in between our heads out there. Now, with regard to the price oscillators, with regard to summation index, they're above zero as we speak right now at 329 in the afternoon, and this is on April the 20th. If, as we come into 4, they stay above that level, the sellers just absolutely lost control. We come back. Let's go take a look at what's going on intraday. Let's go take a look at the ES Mini, because the ES Mini looks like it's getting close. It's getting close. It's trying to get in that 7th inning stretch candle formation. We come back. We'll talk about the meaning of that as well. This is Steve Rhodes with TFNN. We'll be right back.
You know what's cool? taking something that's good for you, something specifically formulated to help with weight loss, better sleep, stress reduction, and the need to detox.
Nico, our hunter and gatherer ancestors found all their nutritional requirements for health in their wild environment. But today, our food sources no longer contain the vitamins, minerals, and nutrients our bodies need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, soil-based vitamins, minerals, fatty, and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated fulvic and humic acids, nature's preferred delivery system. They've been called miracle molecules because, like sunlight, air, and water, life cannot exist without them.
That's right, Paige. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge, formulated and approved by Nico and Paige of Living a Primal Lifestyle. Buy it today for just $89. Click on the Primal Edge banner on the front page of TFNN.com.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
If you're like me, you see the world's emerging nations as a very real opportunity, as these countries and their economies are developing right before our eyes. And you can rest assured that Everbank has spotted this opportunity too. In fact, they just recently unveiled the new 5-year market-safe Future Economy CD. This is a CD that could really deliver, but you only have until May 7th to take advantage. Consider the facts. If the future economy's currencies beat the US dollar over the CD term, you'll get all the upside. And should they lose, no worries. There's zero downside risk here, as you still get back 100% of your deposited principal. Intrigued yet? The May 7th funding deadline is quickly approaching. So hurry over to everbank.com/TFNN-CD for more information, including important product details and disclosures. Once again, that's everbank.com/TFNN-CD. Everbank is an equal housing lender and member FDIC.
Tiger Real Estate Opportunity Fund is currently offering 4-year first mortgages on many of the fully renovated properties that it has purchased. The first mortgages are third-party appraised with a maximum loan-to-value ratio of 70%, providing a secured investment that pays a fixed return of 5% annually, which works out to a monthly income of more than $416 per $100,000 investment with your principal intact and secured. These 4-year first mortgages are perfect for anyone looking for a secured investment that provides monthly income much like a CD. For more information, email tigerfund@tfnn.com or click on the Tiger Real Estate Opportunity Fund banner along the right side of the tfnn.com homepage, or call our office directly at 877-518-9190. There's a limited supply, so act now.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back to the Tom O'Brien Show, folks. I'm your guest host, Steve Rhodes, filling in for Tom for the afternoon. Dow's up 220. S&P is up 20 points. Now, in a market that basically, for the period of the last, let's see, we're in 110 calendar days out there, all of the first quarter and the first 20 calendar days. Well, we'll have to call it. Yeah, well, basically, the market has done not too much. Hasn't moved a whole lot. Now, what that means, the market's really been consolidating sideways. And the best, what that means is that both you and I, being Lewis and Clark, on our expedition out here, we've had to go try to identify where is it that the patterns are giving us the swings, the swings on a daily basis, intraday. Where are they occurring? Now, I'm going to show you one chart here. It's a 30-minute chart for the S&P futures, and it's been giving beautiful signals out here. When we take a look at pattern recognition, we take a look at certain tools out here. There are certain patterns that occur inside the market that are obvious to the eye with regard to when the market has stretched itself in either direction. In the case of the ES Mini, on a 30-minute basis, it stretched its direction to the upside, to the downside, a couple of different times here on the 30-minute basis. Whenever price moves higher and does it without energy, does it without what's referred to as relative strength out there, when it does that, it tells you that it's tired and it's ready to make some kind of retracement. And the question is, well, where is it going to retrace to? The same thing when price is moving lower. Now, I've created this own tool myself on my charting application, so that way, I don't have to sit here and go measure things. It just automatically shows up on my screen. As price was making a low right here and forming this little hammer candle, this was back at 10:30 in the morning. This was back on the trading day of April the 14th. I believe it was April 14th. Let me give you the exact day to make sure. Yeah, April the 14th. Price was moving lower with less relative weakness. And then we got remember, it's the responsibility of the buyers and sellers to just simply paint signs for us. That's candlestick charting. I teach that in my pattern recognition courses. If you've never taken it and you don't understand Japanese candlestick charting, it's like learning the language that I'm speaking right now. If you didn't understand English, it would be very difficult to understand me. Hey, even when you understand English, sometimes it's difficult to understand me. But at least your odds are improved out there. Hey, when it comes to trading and investing, when price is moving lower, and it does with less relative weakness, you have to understand your Japanese candlesticks out there. Just like when price is moving higher. Now, in the case here, price moved higher when the ES Mini formed its most recent high. It did it right here on the trading session. The actual high came in at 2:30 or 3 o'clock in the afternoon. Looks like both of them hit about the exact same tick out there. They were moving higher, doing it with less relative strength out there. And they were forming that beautiful seventh inning stretch candle out there. Now, in Chapman wave terms, that is a wave G. That's your seventh wave. And when markets do that in combination of moving higher with less relative strength, it's an indication of an impending reversal. The question is always going to be, where is price going to reverse to? Is it just going to be a retracement in between your last set of swing points? Is it going to be an expansion? What's it going to be? We don't know. That's why we go ahead and we use stops. We use other tools to help us monitor the flow, A to B equals CD patterns, whatever it might be. There's a number of different tools that help us we use TAS market providers. We use different tools to help us identify where price is headed to. Well, guess what? Friday afternoon at 2:30, as the market was moving lower, it went ahead and it stretched itself. It stretched itself all the way down to low that came in at around the 2:30 time frame. What did it do when it was doing that? It was also making a seventh wave move to the downside, and it was running right into support of our wonderful TAS market profiles out there. Nice big old bullish reversal signal out here. Prices obviously on Friday at 2:30, if you knew what to look for. Look, for my newsletter subscribers, we were short. We are still short, for some of us are, because I simply sent out the message and said, look, if you're a conservative trader, now is the time to go ahead and take your profits on our short trade. Here's the reason why. This was one reason. The second reason was because the VIX index had a one-day rate of change greater than 10%. Do you know what the odds are when the VIX index has a one-day rate of change? What do I mean by one-day rate of change? Yesterday, it closed at X, and today it's 10% or more higher. That's all that I mean by a one-day rate of change. Do you know what the odds are Because when the VIX is moving all over the place, look, at one point the VIX was up like about 17, 18, 19% when I think it got to its highest level out there. And at that stage, sellers were like chomping at the bit, right? If you were a seller, if you were on the short side, the reality is that's the worst thing that you could have happen to you. You want to see the market gradually move down. Yeah, I know everybody gets caught up in the mere fact that the Dow's off 300 points. But when the VIX index has a one-day rate of change greater than 90%, greater than 10%. I just gave away the punchline there, didn't I? Yeah, greater than 10%. Do you know what percentage of time you're going to see a bouncer bottom in the market within the next 2 trading sessions? Yeah, 90% of the time if you go back through 2012. 75% of the time if you go back historically and take a look at it. It's a pattern. It's pattern recognition. It's like human pattern recognition out there. You know, different tools like that I will share with folks that attend that two 45-minute workshops that I'll be doing on May the 7th and May the 14th out there. It's more than just about trading the markets. It's really about life. Now, what is likely to happen here? There's a blue horizontal line going across my screen. That is a line of demarcation. If the ES Mini is unable to get above that level, that's 2,099.25. If it goes up and it tests it and rejects it, then don't be surprised if the market starts to retrace tomorrow, overnight, if you wake up in the morning. Right now, we're in the 6th wave of maybe 7 wave. Now, it can go on. It can blow this out of the water out here. But what we're looking for now, we do not have that same price relative strength. We do not have price moving higher and doing it with less relative strength out there. I wish we did for those of you that are short. We don't. What we do have, though, is an area where sellers kind of, they hang out and they're hidden out there. And that's at this 2,099 level. Price doesn't have to get up there. But if we do get up there and we begin to fail, then we're looking at some kind of retracement. You might say retracement to where? Well, let's go take a look at it. When we take a look at retracements, it becomes relatively easy because the retracements that you're looking for 0.382, 0.618, 0.786. Those are just simply the floors that we look at. If that occurs, let's assume that price gets up to the 2,099 level, then you're looking for price to pull back into maybe 2,085. In fact, that's really what our expectation should be. Why is that? If we take a look at this same 30-minute chart, it's just on a different trading platform here, what you're going to see is a diagonal descending price channel. That's the yellow lines going from upper left to lower right on my screen out here. Guess what? When you break out of a area of resistance, and that's really what this was this morning, an area of resistance, you like to see price come back and test that and then prove that it's really a change in trend out there. Price broke above it with this nice wide-ranging bar this morning. When we came into the market open from 9:30 to 10 o'clock, price has not come back to test it. If it comes back and tests it and rejects it and continues moving higher, guess what we've got? An A to B equals CD to the upside. I won't, well, that would be the pattern that would be in play out there. So that's taking a look at, pretty thorough look at the New York Stock Exchange. And when we come into the very last segment of Tom's show, we'll go back and we'll take a look at the summation index and see what's going on there. In the meantime, I've been asked to go take a look at gold and silver and the miners. But, in order to take a look at the mining index out here, you really want to understand what's going on inside gold. And at this stage here, you've got gold trading at 1194. Now, this yellow squiggly line going across my screen out here, right now it's priced at 1189.40. That yellow squiggly line has acted as support. Look, in the case of gold, it has its own rising price channel. That's the green lines on my chart here. That's the green lines that it was trading in, which it broke out of, and it broke out of on April the 14th. We've seen 3-4 different tests today. You could almost say it was a 5th test to try to get back inside that trend. It's in a really narrow band at about $9-10 point trading range out here. Usually what happens when gold gets into a trading range, a short-term, very small trading range, it's called hold, 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 boom. I don't know which way gold is going to boom to. Is it going to boom to the upside? Is it going to boom to the downside? Hey, if we just utilize Tom's price and volume, we've seen that it's been pulling back into a sign of strength with light volume. It's tested a swing point at 1179 out there. It's done that with light volume. That's the swing point from November the 7th out here. It's holding above this yellow line. That says that you should either be neutral because it's trading below, or if you're not going to be neutral, The preponderance of evidence says that gold should move higher out here. Hold. But if we see a clear conviction of a break below that yellow line out there, 1179 will come into play. You've got an A to B equals CD to the downside that will come into play. The minimum out there, if you're taking a look at price projections, the A to B equals CD pattern here, I'd say we're looking at about the 1178, 1169, 1158 level. But you've got to take things one day at a time. Now, the direction of gold has an impact on the mining index out here. The two know how to tango. And that's why when taking a look at somebody says, hey, go take a look at the miners out here, it's really what's first going on inside of gold. In the case of silver, if we look at silver here real quickly, it also is outside of its rising price channel out here. Broke through that with conviction, has not been able to get back in, but it's really just coming out to the area where it broke out. The day when it broke out was March the 19th. It's really just testing that low as we speak right now. We've got the Dow. She's up 208 points. S&P is up 19, composite up 62. We'll be right back, folks.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy, a set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
No matter where you listen to TFNN programming, we want you to know you can always access your favorite shows on demand through TFNN.com. TFNN airs live programming every market day from 8 a.m. till 6 p.m. Eastern, and you can view each program by accessing Tiger TV through our homepage. We even have an easy link for all mobile devices, including iPhones and iPads, located at the top right-hand corner of the TFNN homepage. You can use your smartphone to view Tiger TV, but if you don't have a mobile connection that can keep up with streaming live video, then you can simply visit TFNN.mobi in the browser of your smartphone for live streaming audio of all of our programs. The mission of TFNN is to educate our audience directly and interactively through our interactive website and radio call and talk shows. TFNN is able to teach all levels of investors the technical skills needed to trade in today's marketplace. In order to get the best information possible, TFNN has assembled the most respected financial minds in the country to provide the most current news and comprehensive advice available. TFNN.com, educating investors. This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Tom O'Brien.
Rhodes filling in for Tom for the afternoon. The Dow's up 211, S&P is up 19 points. Composite is up 63. It's going to be a close call here on the New York Stock Exchange. All that's needed in order for that price oscillator to get above zero is 1,280. 1,279 will get it right to the zero line out there. 1,280 net advancing issues. Right now you're at 1,259. So it's going to be a close call. We got 9 minutes. We'll see what happens as we come into the closing bell. We spent a bit of time on the ES mini, on the S&P futures. But, you know, the NASDAQ futures is also just as critical for us to look at. Now, remember, inside the ES mini, we were taking a look at the most recent two bottoms, most recent top that had formed out there. And because of the, you know, the intraday time periods are the chart patterns that are giving us the best signal to the yin and the yang that's going on inside the market. Now, as far as the yin, we've got the, and I don't even know what that means, but as far as the yin goes, we do have a seventh inning stretch candle. We have that seventh inning wave pattern that has formed to the upside. We're still in only if we get a close here at 4 p.m. that is below this high that came in at 3:30. That high, by the way, is 44.17. Then we would have a confirmed seventh wave to the upside. But here's the key. At this stage, we don't have any kind of bearish reversal signal out here. And remember, we took a look, we started taking a look at the island top reversal patterns and how when they fail, that there's nothing more bullish than a failed bearish pattern. Same thing holds true here with regard to that seventh wave pattern. So we've got earnings after the bell. No idea how much they might impact the NASDAQ here, but you've got Amgen, Chipotle, Illumina, you've got Yahoo, Intuitive Surgical, United Rentals, Yum Brands. So, you know, we'll be able to see how the futures trade as those earnings reports are released. Now, if we got this little bearish engulfing candle right now, we're seeing a bit of pressure, then we would get a reversal signal out here. And then the real key tomorrow, if we were to get this pattern to play out here, that way, you know, you don't, this way, there's been something for the bulls on some days and something for the bears. Really what you and I want to do is understand what is it really that the market is communicating to us. And it's always important to get that time perspective. It's why we spend time taking a look at the monthly charts out there to really understand where this battle is, this real tug of war in price trying to move higher out here. It's up against significant levels of resistance that once cleared. It's kind of like running the 4-minute mile. You realize that for thousands of years, people tried to run the 4-minute mile. The day that Roger Bannister broke the 4-minute mile, there was a bit of a headwind. He did not want to run the race. When asked, how was it that after all those years, now not that he was 1,000 years old, I'm just saying that for thousands of years, people tried to break the 4-minute mile. When he was asked how did he do it, One of the ways that he did it was he ran the race in his mind before he actually did it. He saw himself actually breaking that 4-minute mile. Folks, you know how it works in life with regard to just your own pattern recognition. You know that if you don't believe you're going to accomplish something, if you walk up to take a putt, if you walk up to take a trade, if you walk up with disbelief in your ability to be able to accomplish something, what's the likelihood of you actually pulling that task off? Yeah, you know the answer to that. But here's the deal. Here's the amazing thing. What people actually just need to see is how it actually happens, which is what I do when I teach you about these patterns that we're taking a look at, which is what I'll do for May 7th and May 14th when I teach you about human pattern recognition, which really unlocks all the keys to the potential. If you're looking for better trading techniques to understand why you do the things you do, if you want better relationships in your life, if you want to be more successful at any business, if you want to overcome any hurdle, just like Roger Bannister overcame a hurdle in running that 4-minute mile, then this is a workshop that you want to attend. So at the homepage of TFNN.com. Look, here's the deal. Once people saw Roger Bannister break that 4-minute mile, the record didn't stand for very long. I think it was less than a month. And since then, we've had thousands of people break that 4-minute mile. What people need to see is they need to see how it's done. Once they see how it's done, then all of a sudden the belief goes up and people will say, yeah, I can do that too out there. All it took was a young Tiger Woods to say, hey, he could actually fend off, the rest of the PGA Tour. He lost his touch out there, lost his touch for a while. Now we've got a lot of young snappers, that are up there doing the same thing. They believe that it's not about age. Now it's not about age, right? And being able to win the Masters tournament or anything else along those lines out there. It's all about what's in between the ears out here. And that is really one of the keys, and I look forward to sharing with you and all the folks. Remember, all the newsletters. Look, if you have never test drove Mastering Probability, come on over to the homepage of TFNN.com, sign up for it. You'll get access to my newsletter service for 30 days. You get access to this workshop because all newsletter subscribers get in for free. If you don't want to do that, just go sign up for the $97. Come on, it's less than probably the coffee that you'll spend, what you'll spend in Starbucks over the course of a month out there. And, Starbucks is not going to teach you how to overcome whatever hurdles it is that you face in life. The hurdle inside the New York Stock Exchange, well, that's called the price oscillator line out here. And that hurdle right now, it's just slightly below the zero line. That says that the sellers, believe it or not, even with a market like this, are still in control of the New York Stock Exchange. I will put more leverage, more credibility into what goes on inside the New York Stock Exchange when it comes to the price oscillator than I do with the Dow. I'd like to see the composite join along. So this would say we would have a mixed bag out here over the course of the next 2.5 minutes. We'll certainly watch how this NQ trades on its 30-minute chart. Pretty much looks like we've got a confirmed wave G, just no bearish reversal signal here just yet. But at least this way, you and I, we can take a look at the market objectively, not get too excited if you are a bull, not get too down on yourself if you're a bear. But if these areas get taken out, folks, then you've got to be on the long side of the trade. The markets are still in a significant uptrend. If we go take a look at the VIX index right now, remember I mentioned that one-day rate of change. Look, what the VIX index also did on Friday was it tested its 50-day exponential moving average out here. That is priced out right now at 1477. That's the blue line, squiggly line going across my chart out here. The market will do no damage. This is really a liquidity gauge out here. A lot of people will tell you to go ahead and use the VIX as a fear indicator out there. I just ask those people to teach me how to trade what it is that they're communicating to me. I can teach you how to trade the VIX index with regard to the general market. When price is below the 50-day exponential moving average, the S&P is going to basically do one of two things. It's going to move sideways to higher. Now, if it finds a top out there, that's a whole different scenario. But for the most part, 90% of the time that the VIX index is trading above the 50-day exponential moving average, and you go back to 2009, it doesn't matter whether it's a high VIX or it's a low VIX. What matters is where is that line of demarcation. And for you and me, that's the 50-day exponential moving average. Folks, thanks for joining me here on the first hour of the Tom O'Brien Show. I'll be up covering for Tom during hour number 2. Come on over to the homepage of TFNN.com. Sign up for my workshop or sign up for the newsletter service, Mastering Probability. But stay tuned for the second hour. We'll go see exactly how this market here is going to close the next minute or so, whether that price oscillator is above or below the zero line. Have a great Monday, folks. Look forward to seeing you. Hey, bright and early tomorrow morning, 9 o'clock, when I kick things off at the Trader's Edge shows. We'll be right back.
The following is a presentation of TFNN. The Tom O'Brien Show is produced every business day. Tom takes your phone calls toll free at 1-877-927-6648. Internationally at 727-445-1044.
Let's go to Nick in Tampa. Hey, Nick, what's going on?
Tom O'Brien, it is an absolute pleasure.
Thanks so much, man. We appreciate you calling.
No problem. Dude, I've been listening to your show for about 2 years now, and it has just been wonderful. I listen to you, Basil, Andy. You guys do an amazing job.
Oh, thank you so much. We appreciate you growling and prowling out here with us.
Now, Tom O'Brien.
Good day, Money Masters and Treasure Hunters. Welcome to the April 20th magnificent Monday edition of today's Closing Bell on the Tom O'Brien Show. I'm your guest host, Steve Rhodes, filling in for Tom while he's away for the day. Hope everyone out there is having a magical Monday. Let's make sure we have an extraordinary evening. Of course, the easiest way to do that is to always remember that life happens for us, not to us. That's something you've got to teach to your kids out there and everyone else that is in your life out there, because when that happens, it means that you and I, we can find the gift in every set of circumstance that life is going to throw at us. That is the way to work. That's the way to live, folks. Now, for those of you not familiar with me, I kick things off. Well, actually, things are kicked off with John Logan at 8 o'clock. Then I follow up with John for 2 hours from 9 to 11. My shows are archived on Channel 9 and Channel 10 out there. And the most important thing is for you to know that I'm absolutely grateful for your presence here, and I'm here to serve you. That means all you got to do is pick up that phone, dial on in at 877-927-6648. Of course, internationally, you can also reach out to us, 727-445-1044. That's our number out there. This is Magical and Marvelous Monday. This is Tiger Financial Network. I'm Steve Rhodes. Welcome to the show. Right now, we have the Dow, which had closed out up 208 points at 18,034. The S&P up 19 points. She closed at 2,100.40. NASDAQ Composite up 63 points at 49.94. Russell 2,000 up 13 points. She closed at 12.64. Gold's trading back $8 right now at 11.95. Silver down 29 cents at 15.93. Light sweet crude is up 52 cents. That's trading at 56.26. Leading the charge today, dollar-wise to the upside, was Amazon up $14.24, up about 3 8/10% out there. Intuitive Surgical, I believe there are with numbers here after the bell. Intuitive Surgical closed up $12, closed at 5.52. Yeah, I don't see any report on their numbers here yet. It could be before the bell tomorrow. IBM was up $5 and change. Hasbro up $8. Intercept Pharmaceuticals up $7. Priceline up $4. Faro Technologies, or Faro Technologies, F-A-R-O, that was down $16, down nearly 26%. Juno Therapeutics off 13.5%. You've got Royal Caribbean Cruise Lines off $6. Kite Pharmaceuticals down 6. But let's go start off and let's go take a look at what's going on. Well, first, just as a quick follow-up for those that were listening to the first hour of the show, I make a big deal about what the price oscillator is doing inside of the New York Stock Exchange. Let's take a look at the New York Stock Exchange. We had a nice little island top reversal that formed. There was basically a 4-day session that formed this island top. Those sessions being April 14th, which we then saw a gap up on April 15th, a move sideways on April 16th, and then the gap down on Friday. There have been a handful of island reversal tops and bottoms. They do have some meaning, but we did see intraday a spike higher into that gap down into the low of April the 16th. Nonetheless, it has not completely failed. That island top has not completely failed. The price oscillator closing just below the zero line, minus 0.81. What the New York Stock Exchange actually needed, net advancing issues today in order to get above the zero line, was 1280. We saw 1257 as the magic number. Sometimes these things change just a tad here during the next hour or so, but for the most part, this should be where it's at. Now, what does that mean? It means the work to the downside may, in fact, not be over. Now, that is contradicting what it is that we see with regard to the summation index, with regard to the price oscillators inside of the NASDAQ Composite, which closed just above that zero line, and the Dow, which also closed just above the zero line. However, the pattern that has been working the best inside the S&P futures, the NASDAQ futures on their 30-minute charts out here, has been one of Stevie's favorite patterns. If we take a look at the NQ, we focused on the ES Mini. The NQ, what it has done, when it made this bottom down here, It made it with what's referred to as a price relative strength divergent bottom. It means that price was pushing lower into Friday, into 2:30 in the afternoon, but it was doing it without vigor, without energy out there. And when price moves lower without energy, it says you've got to be on the ball. You've got to be watching. Believe it or not, as bad as things might look, even if the composite was down 75 points, is telling you that somebody knows something, that sellers aren't really buying into it. And that's exactly what took place here. Now, when we take a look at wave patterns, for those of you that follow the Chapman wave, and you should follow it, it made 6 of 7 moves to the downside out here. We had a nice little big bullish engulfing candle that formed as we came into the 3:30 time session out there. We had some follow through on Friday coming into 4 o'clock. We had our support levels of our TAS market profiles down there on a 30-minute chart. Well, guess what? The same pattern that we had last Friday at 2:33, 3:30, 4 o'clock, we've got a similar pattern having formed now as we came into this close. We've got price having moved higher, doing it now with less relative strength. Before it was with less relative weakness to the downside. We've got a nice little bearish engulfing candle that took place here as we came into the 4 o'clock close. There is no trade if you trade futures, and I gave this trade out inside the Tiger's Den. There is no easier trade in trading the futures than the pattern that is set up right now inside the NQ. I'm not saying this is going to work, but when it comes to risk reward, typically what you like to do is you like to take a look at the average true range. And let me ask you, have you ever done this? Have you ever been right on the trade and wrong on the stop? Meaning that you used too narrow of a stop and the trade actually worked out in your direction out there? Well, if you have, I've got the secret, I've got the tool to help you be able to avoid that kind of a pain. With regard to this pattern here, this is a whole separate pattern. Your stop, if you wanted to go ahead and take a short position inside the NQ, and it's a beautiful thing out here with regard to the trade, your stop is like one tick above 44.17. Right now it's trading at 44.08. When I gave out the trade, it was at 44.10 out there. And I said, that is the trade. You do not get, okay, maybe you get a couple of bucks, better reward to risk out there, but it does not get better than that. Now, you can go ahead and apply that in essence to the S&P futures out here on the 30-minute chart. Now, the reason I'm showing you this is because, hey, in the last 3.5 months out here, nearly 4 months, the market's done nothing. But what it has, it's done a lot on an intraday and intra-period time basis out here. And the same patterns that we use with regard to daily, weekly, monthly, they work on all different time frames out here. The trade setup, quite frankly, inside the ES is any close above 2,099 in a quarter, you would be out of the trade. So beautiful. Now, today, the market was supposed to bounce. We got those signals on Friday because of the VIX index and where it closed. Not in price, but with regard to the percentage change from day to day. It said that we had a 90% probability of the market bouncing today. Now, what it doesn't tell you in my case study out here, let me show you that chart. So I'll show you that tool. Give me a moment. We'll put that up on our screen out here. And I'll show you this chart. It's a beautiful chart. Of course, I'm not saying that because I'm the one that created it. It's really just a beautiful chart. And what this shows you, if you've never been a newsletter subscriber, come on over to the homepage at TFNN.com. Sign up for it for the next 30 days out there. You can try it unconditionally, money back guarantee. Plus, I'm going to be doing a special workshop that you're going to want to have access to, and you'll get the copy of this charts and all the other great little tools, little nuggets out there that you want to have in your trading arsenal. Hey, guess what? There's a 90% probability. The blue lines are really what it is that you want to focus on my screen out here. When we have the VIX index have a one-day rate of change in excess of 10% out there, guess what happens within 2 trading sessions? You see a market bounce. Sometimes it's a bottom out there. Sometimes, and I'm expecting the market to form a bottom sometime this week. It could have come in at 2:30 in the afternoon on Friday. If the New York Stock Exchange had actually gotten back above the zero line in its price oscillator, I would tell you that it had. It didn't. So that says, and we got this 7-wave pattern, says we should have a retracement that takes place in the overnight hours. Now, if that high gets taken out, there is nothing more bullish than a failed bearish pattern out here. So as I say, with regard to the stops, if you were one that was trading the NQ out there, it's an easy, simple trade at your best reward to risk. And if we see that ES mini close about 2,099 and a quarter, that'll say that the bottom actually did come in on Friday out there. And then we will just take things one moment at a time that way. Now, that's what's been going on the intraday session. So now we're going to go ahead and we'll switch over what happened inside the ETF structures out here. Because you see, it's really not been the daily charts for the most part that have really given us the overall best signals with regard to what takes place. It's really been coming from either the 5-hour chart, the 120-minute chart, the 30-minute charts out here. But nonetheless, let's go take a look and see what we can find out inside of the ETF structures for the 4 primary indices. If we go take a look at the QQQ ETF out here, which historically makes bottoms with high volume. The volume on Friday wasn't that high. In fact, the volume on Friday, which was 46 million shares, was not enough as it was testing its swing point from March 26, which had 47 million shares. The Qs were pushing the swing point, pushing down into a swing point with light volume. I would have much preferred to have seen a 70 million share day because that type of share typically forms the bottom. You don't believe me, just go back and take a look at every one of your charts and go back and take a look at them from about 2007 through now. You'll see that high volume lows inside the QQQ ETF series. I can't tell you why it works. They form bottoms. This is Steve Rhodes with TFNN. We'll be right back, folks.
If you're like me, you see the world's emerging nations as a very real opportunity, as these countries and their economies are developing right before our eyes. And you can rest assured that Everbank has spotted this opportunity too. In fact, they just recently unveiled the new 5-year market-safe future economy CD. This is a CD that could really deliver, but you only have until May 7th to take advantage. Consider the facts. If the future economy's currencies beat the US dollar over the CD term, you'll get all the upside. And should they lose, no worries. There's zero downside risk here, as you still get back 100% of your deposited principal. Intrigued yet? The May 7th funding deadline is quickly approaching. So hurry over to everbank.com/TFNN-CD for more information, including important product details and disclosures. Once again, that's everbank.com/TFNN-CD. Everbank is an equal housing lender and member FDIC.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Trade with confidence and clarity while using the software that thousands of institutional traders rely on to make the best and most accurate decisions. Choose from 1,000 equities, currencies, and futures instruments utilizing the TAS architecture. As seen on Bloomberg terminals worldwide, the TAS Profile Scanner is a benchmark technical filtering system that thousands of traders rely on, and now you can too. For a limited time for TFNN subscribers only, we've reduced the price to just $97. That's over 75% off. John Logan hosted a special subscriber-only webinar in December, and you'll gain access to that archive as well, so you can learn exactly what the TAS Profile Scanner can do for you. Try this product out. No matter what you trade, the TAS Profile Scanner can help you make more informed trading decisions. There's no obligation to pay anything. Don't let this offer pass you by. Get your 30-day free trial to the TAS Profile Scanner today by signing up at TFNN.com. Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Tom takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back to the Tom O'Brien Show, folks. I'm your guest host, Steve Rhodes, filling in for Tom for the afternoon. We were taking a look, began taking a look at the ETF structures for the indices out there. We were looking at the Qs. We noticed certainly on Friday that the Qs were pushing down into the swing point for March 26, which had 47 million shares, doing it with light volume, 46 million shares, so not enough to really bust it to the downside. But when you do see high volume inside the Qs to the downside, that signals a bottom out there inside of the marketplace. Now, today, you had a bounce with 26 million shares the upside, but price did close inside of the April 13th swing out here. And that only had 17 million shares. When you close inside the swing point, it says that price ought to go test the high. So a test of 108.38 would not be out of the question. Of course, what that would then also mean is that this 30-minute pattern that we just took a look at, that this would fail out here. I will give deference to this 30-minute pattern out here because, you know, that's really the better pattern that has been working. Now, what could easily take place is this pattern here works overnight. We see futures trade lower into the morning, and then that becomes perhaps the next viable bottom, actually setting up an A to B equals CD to the upside out there. But when we just take a look, if we were just to look at the ETF structures, just take a look at the daily, its message is going to be a message that's different than what you and I just took a look at on the 30-minute chart out there. So that's why I like to be thorough with regard to how we would analyze the markets and what's going on out there. Now, if we go take a look at the Russell 2000, the IWM, what did it do today? It was up with volume of 24 million shares. Now, on Friday, price was not even able to get down. There was price of volume of 48 million shares, and that was in essence really going into about 20 million shares out here. But it's really going into this gap. We saw the IWM, these windows out here, these gaps are strong. They're important for us to look at. They can act as levels of support. Price never even got down to test the bottom of the gap, which is 123.70 out here. Now, in the case of the IWM, absolutely the strongest of all the ETF structures that are out there. It has two confirmed A to B equals CDs to the upside. The most recent one was the March 23rd swing point, which has 17 million shares, was taken out on the trading day of April 15th with 37 million shares. And we take a look at its price trend. If we come back and we take a look at, well, I'll just put this on a monthly basis real quickly, then we'll go to the weekly chart. Here is the IWM from the March 2009 lows out here. You can see in this nice uptrend. We can also see that price is up towards the top of that rising price channel where it's running into a bit of support. That doesn't mean that it can't spike higher, which I suspect that it wants to do because of those A to B equals CD patterns. There are two of them. We just looked, you and I, at the most recent A to B equals CD pattern on the daily chart. The question is, has the bottom been put in here for the next couple of weeks? I don't know the answer to that. We'll have a pretty good clue come tomorrow's trading session. And we take a look at what's going on inside of the SPY out here, up with 88 million shares today, up $1.90. What did it do on Friday? On Friday, it was unable to get down to the March 26 swing point. That had 153 million shares. It was down with 191 million shares. Now, Friday was options expiration. That always tends to sway volume out there. Nonetheless, price never got down to even test that swing point. What it did today was it got into the swing point, though, for the most recent swing point, which was April 15th. That's got 99 million shares. It pushed up into that swing point with lighter volume. It rejected the bottom of that swing, which is 209.95. It actually closed at 209.85, 10 cents underneath that. The SPY is not giving you a ton of information. Hey, the longer-term perspective with regard to the SPY, we put it on a monthly basis. You'll see that nice rising price channel. You will see a trend line coming off of the lows out here in 2011, October 1st, 2011. That trend line hasn't been broken the SPY is trying to break through their resistance line of this rising price channel. Of course, breaking through it doesn't mean anything. Price is rising. It doesn't even mean that it has to be contained within inside that, because like that price channel line was lower back here when we were dealing with the lows, or with the highs back in April of 2010 and May of 2010. That line just simply keeps. What we want to know is the bottom hasn't been busted. What we know is that the trend from 2011 hasn't been busted out here, and nor have the lows that we just took a look at on the daily chart for the SPY. In the case of the SPYs, if in fact inside the ES mini, we were taking a look at this earlier here. Here's the ES mini. Here's the 30-minute chart. The real key level is going to be, well, right now there's really two levels to be watching. We're seeing price pull back. Not to be unexpected when we took a look at that seventh wave, that price relative strength divergent pattern inside the 30-minute chart on the NQ. So if that high doesn't get taken out, the ES mini likely will also trade lower. And the level that you'd be watching for overnight is going to be 2088.25. That's the next level of support inside the ES mini on its 30-minute chart to try to find its legs, to try to find support. If you see a close below that, what you can expect is a deeper retracement inside the ES mini. It may not start till 6, 7, may not start till 3:40 in the morning out there, but that would be its message. But expect that from an anticipation. I want you to be able to anticipate what these markets are going to do. That's the best thing about is be able to anticipate. And it all depends upon your perspective. That's why I zoom out. I take a look at the monthly or the weekly charts with regard to what the SPY is doing versus what it's doing on a daily chart. Let's go take a look at the Dow Diamonds. Let's go see what they did today. Yeah, the Dow Diamonds finished out at 180.03, 5.3 million shares to the upside, up $2.09. What did the Dow Diamonds do on Friday? I know the swing low is March 26. 153 million shares. You did 100. No, that's the SPY again. Come on, don't do that. I know I clicked on the button, DIA. There we go. We'll get the diamonds. You were just testing me. Good test out there. What the diamonds actually did was they did get down to that March 26 swing point out there. That had 6.6 million shares. Volume was 8.6, 2 million more. Still wasn't able to bust it out. It was a test of that swing point. Says that price should have been back down there to test that. Well, inside the Dow Diamonds, looks like the swing point was from April the 16th. Now that's its most recent swing point, as well as the swing high out here from March the 2nd. You moved into that swing point, which was April 16th. It's got 3.8 million shares. You do it with 5.3. I know maybe it's going to take another run for the highs out there. But if I take a look at the Dow 30-minute futures contract out here, we're going to see it's made its way into that seventh inning stretch, that seventh inning wave. You see how this is a market profile that we're taking a look at. The point of control, where price is happiest, where there are the largest number of buyers and sellers, where you've got the largest traffic pattern. That was at 17,983. See how that line is closer to resistance, 18,000. Hey, even Steven out there. I like that even Steven thing. That says that it's sellers that are in control on the 30-minute basis for the Dow. That says price support should be 17,935. You break 17,935, price will come back and it'll test its breakout that took place here earlier this morning, and that was at about 9 o'clock, between 9:30 and 10. That takes you back into the price range of about 17,867, and that's inside the Dow futures out there. A quick peek at, so that takes care of those markets. Quick peek at gold. What is gold doing? As long as gold is able to stay above, and I mean close above, we're looking at daily action out here. As long as gold is able to stay above 1189.40, it's not bearish, but it's really hard to get super bullish on this nice metal out here, because it still has rejected its rising price channel. That's the green diagonal lines going across my screen. Gold is going to make a big move. That's Stevie's prediction out there as I look into my crystal ball. We've seen 6, 7, 8 days of very narrow $10 price range closes inside of gold. Somebody, something has got their thumb on it. What happens with gold? It's called hold, 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 hold. Boom. I just am not certain whether it's going to take off to the top side or the downside, but it'll be a big move. This is Steve Rhodes with TFNN. We'll be right back, folks.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy, a set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
You take a hands-on approach to managing your investments, and whether you're bullish or bearish on U.S. Treasuries, the ETFs from Direction Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor, Foreside Fund Services, LLC. Tiger Real Estate Opportunity Fund is currently offering 4-year first mortgages on many of the fully renovated properties that it has purchased. The first mortgages are third-party appraised with a maximum loan-to-value ratio of 70%, providing a secured investment that pays a fixed return of 5% annually, which works out to a monthly income of more than $416 per $100,000 investment with your principal intact and secured. These 4-year first mortgages are perfect for anyone looking for a secured investment that provides monthly income much like a CD. For more information, email tigerfund@tfnn.com or click on the Tiger Real Estate Opportunity Fund banner along the right side of the tfnn.com homepage, or call our office directly at 877-518-9190. There's a limited supply, so act now.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back to the Tom O'Brien Show, folks. I'm your guest host, Steve Rhodes, filling in for Tom for the afternoon. Looks like out with numbers here after the bell. IBM, their first quarter net income, $2.3 billion. What was that versus, though? $2.3 billion. I don't see what that was versus. Thought it was up on my screen out here. Now, IBM closed out the day at 166.16. Right now, trading out at 165.39. So we're not seeing it really have a significant impact to the downside. But what IBM did today, let's go check it out. Volume was 9.3 million shares to the upside. Now, look, we know they're buying back their shares. Doesn't matter. Their B point, a B point of an A to B equals CD to the upside, was taken out today with volume. That was from February 24th. That had volume of 4.7 million shares. Today, up with 9.3 billion shares. That says that what IBM wants to do then is at least make that one-to-one price projection. That one-to-one price projection would take you up to the 168.87 mark. Let's pull IBM back even further. Now, what IBM has, it's got a significant level of supply. It's got a huge area of resistance, which is in between this gap. That's in between the price range of 170.33 to 180.22. Our focus really ought to be on the 170.33 level, because that's just slightly above the fulfillment of this one-to-one A to B equals CD. So our expectation ought to be that IBM should make its way up to 168.87, at least spike 170.33. Now, if it closes above 170.33, which should be in a significant area of resistance, well, then there's always that possibility that's going to go ahead and try and repair that window being that gap down, which was a huge gap down because you're talking about a price point of 180.22 inside of IBM. If you're short IBM, you do not want to see it close above 170.33 because it'll be inside that gap, and you will not know whether or not it's going to go ahead and get up to that 180.22 mark out there. And that's the result. IBM trade right now 165.85. So whatever pullback is going on, it is not anything significant with regard to today's price activity. If we do take a look at some things that did move today in the market, other than just the market itself, we would take a look at Intercept Pharmaceuticals, ICPT. I don't know when they're out with their earnings. I ought to put my little flag on my screen out here. But Intercept Pharmaceuticals, let's go see what it was doing. So it was up fairly large dollar-wise, but the reality is, well, here is the reality. Intercept Pharmaceuticals has a high volume high from August 12th. Now, it sold off pretty big that trading day. That high was 349.08. You're trading with inside that swing point out there. You're trading with inside that day. Intercept Pharmaceuticals wants to make a run for 349.08. He closed out at 282.29 out there. Let's take a look at what's going on inside of Hasbro. Hasbro having a nice day. 7.8 million shares to the upside. Big volume, all-time highs. Volume of 7.8 million shares out there. Where is it that this is headed to? It starts to become pretty darn difficult to figure that out. If we look at A to B equals CD patterns, just to see if there's anything reasonable down here. Your A point on this pattern inside of Hasbro has to be all the way back down here in June of 2012. And realistically, your B point is all the way out here, it looks like in April of 2014. And your C point down here in August of 2014. We can see that price today gapped up into the one-to-one A to B equals CD. What does that mean? When you move into a D point, that's what's referred to, AB equals CD. When you move into a D point of this lightning bolt pattern, it says that you're going to go to the next level. Hey, how would you like to go to the next level in life, folks? I'm going to teach you how to do that. I'm going to teach you a set of tools in a workshop that I'm going to be hosting here on Thursday, May 7th and May 14th. We're going to break it down into two 45-minute sessions out there. If you're a subscriber to Mastering Probability, you're already enrolled in that course. You don't have to become a newsletter subscriber. You come over to the homepage at TFNN.com. You can sign up for the workshop. It'll be a set of extraordinary. I like to believe, I'm a pattern recognition specialist expert when it comes to being able to trade the markets. In a period of seconds, I can take a look at a stock chart and give you an excellent idea of what it's doing. I come back to the shows each day, no matter what I believe the markets were telling me last minute, I'm willing to take the new information that the market gives us and willing to change course. Of course, it always depends on the time frame it is that we are trading. And I don't get too caught up into what the market, these markets move up and they move down. And both you and I, we look for patterns out there. Well, guess what? Just as I am a specialist with regard to pattern recognition on a stock chart, I'm even more of a specialist when it comes to human pattern recognition, being able to teach you the reasons why you do the things you do out there. You know, sometimes you do the right thing at the wrong time, and you just simply, it ends up in a really bad result out there. So we'll talk more about it. I don't want to spend too much time right now, but we'll talk more about it over the next coming weeks. It's going to be 2 weeks from this coming Thursday when I will do that workshop. So all the details on the homepage of TFNN.com. In the case of Hasbro, when it forms its D point, its pattern recognition, when it forms a D point like it did with a wide-ranging bar out there, it says it wants to go to the next level. Its next level is $79.70 out there. Ticker symbol is HAS. If we go take a look at things that are moving to the downside out here, how about this? Faro Technologies, FARO, traded down 26% out here, closed out at 46.11. Volume in between in this equity just simply exploded. 2 million shares for this is an absolute explosion. What price has not done is it has not gotten back really to an area where this thing really broke out of, and that'll take you all the way back into October of 2013. And that says that price probably comes back to $39.32 to about the $40 level, closed at 46.11. Ticker symbol there, FARO. Also to the downside out here today, Juno Therapeutics. Juno Therapeutics down 13.5%, down $8 and change out here. This is a daily chart. That is a nasty looking candle today. Looks like now volume was 3.2 million shares out here. That's volume off of the highs out here. That's a huge bearish engulfing candle, basically taking back trading that took you to March 30th. We're at April 20th out there. You'd have to say at this stage of the game, Juno Therapeutics wants to go to its IPO date, somewhere between $34.71 to $39.50. Closed at $55.90 out there. We took a look at gold earlier. Well, maybe it was the other show. I'll just give you, let's go gold, silver, light sweet crude for you. In the case of gold, if you're long gold, you're okay unless you see it close below 1189.40. You see it close below 1189.40. Here's what you should expect. A test of 1179, 1178, that would form your 1-to-1 A to B equals CD. If that area fails, then you're going to be closing inside the swing point from the trading session of November 7th. And that's never a good scene, even if it's on light volume. It says price can get all the way down to the bottom, 1159. If you're short gold, you want to see it close below 1189.40 out there. With regard to silver, if we go take a look at silver right now trading out at $15.91, down 31 pennies. What do we know about silver? Silver has passed a couple of swing points out here. The most recent swing point is from the trading day of April 14th. That was a low of $15.95. You're trading below that as we speak right now. If we take a look at retracement values from the low out here on March the 11th to the high out here on March 25th, it says that the price inside silver should make its way down to $15.72. That is your 0.786 retracement. Does it have to stop there? Well, here's the deal. At 1572, it starts to get into the swing point low from March 11th. Any close inside 1573, 1572, is just below it, but that could be a test. But any close under 1573, look out, because that says 1526, another 50 cents or so. There's a 20, another 20 cents or so to the downside would likely be what's going on inside of silver. If we take a look at the XAU, it did manage to trade up just slightly out here. The XAU closing out at 71.20 out here. What was the XAU doing? The XAU, if I take a look at its little rising price channel, we've got a short one out here. Let's go ahead and draw that in on our screen out here. I would say that pretty much... that's probably just a very narrow rising price channel out here. Maybe price is going to pull back and test the lows of about 68.49. Today's candle session, not a whole lot to be learned here. Maybe if we take a look at what's going on inside two of the top equities here, such as Gold Corp, GG, one of the top equities. Let's go see what it did today. What Gold Corp is struggling to do is find a way to get over resistance. Resistance inside of Gold Corp, $20.03, as well as $20.46. That was brought to you by that gap down, by that little open window on March the 6th. 13.5 million shares to the downside. When price got up in there, it was with 7 million shares. Wasn't going to break it. Price has found a bit of a support today. He's pulled back 5.7 million shares after moving higher with 8.3. So the setup here, Gold Corp is at least pulling back on light volume. If you take a look at Barrick Gold, this had been strong like bull. Let's go check it out and see. Oh yeah, Barrick Gold having completed its 1.2728 to B equals CD to the upside out here. Barrick Gold wants to try to get over an area of resistance really established back in November of 2014. 1332, you get above that, and it's a green light special inside of ticker symbol ABX. This is Steve Rhodes with TFNN. We'll be right back, folks.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Technomental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technomental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com. Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Who says you can't take it with you? TFNN says you can. With your mobile device and TFNN's live radio streams, TFNN has put it all in the palm of your hands. No special apps to download. No subscription fees for live radio or Tiger TV streams. We say you can.
Each and every time that the dollar ticks higher, S&P wants higher price. Each and every time that the dollar's ticking lower, guess what? S&P wants lower price. Dollar, the metals, and the S&P are going tick for tick.
We say you can. The Tiger Financial News Network. Smart investors and professional traders know you can. TFNN.com. Educating investors. This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Tom O'Brien.
Welcome back to the Tom O'Brien Show, folks. I'm your guest host, Steve Rhodes, filling in for Tom. For those of you not familiar with me, I do the 9 to 11 o'clock shows Monday through Thursday, Friday, 9 to 10 out there. So if you're trying to understand or gauge what the futures markets are doing, what that means, tune in. If we're not on a radio station in your area, you can, of course, get us on your mobile device at tfnn.mobi. You can get the live stream, which means you get to see my ugly mug as well as my beautiful charts out there, which will help you to understand what the meaning of what the markets are doing. Just simply pattern recognition specialists who use all the tools, have a great toolbox, and that way it's all about just kind of remaining, it's all about remaining calm in everything that you do. Don't ever do anything out of fear. I'll bet you can go back and take a look at the number of times that maybe you made some kind of decision out of fear in your life out there, and typically ends up with a bad result. And that's why I don't want you to fear a market that's moving lower. Instead, I'd rather, show you a set of tools that you can use, that you can apply in any time frame to help you understand what the markets are doing. Just simple pattern recognition tools. I like to teach you from a human emotional standpoint, the psychology of trading, the psychology of life, a set of tools. And I'm going to be teaching folks about that. I'm very excited to be able to do this. It's going to be the first time that I've shared with folks an entire set of tools that help you really understand why you do the things you do. Maybe it's not yourself. Maybe it's somebody else in your life. Maybe it's employees that you have and you're trying to figure out how to motivate someone. Maybe you're looking to improve the relationships that you've got, but it's really all the same. Psychology of trading and psychology of just life, they're really one and the same. They're interchangeable, but I'll show you how you can utilize these tools to improve your trading out there. I'm going to be holding this course on May 7th and 14th. All my newsletter subscribers have access to it for free. If you've never been a newsletter subscriber, come on over to the homepage at TFNN.com. Sign up for Mastering Probability. It comes with a 30-day unconditional money-back guarantee, so that's pretty simple. If you have been a subscriber, well, then each of you know the type of passion and the type of information that I put inside my workshops. Everybody who's ever attended a workshop leaves with a treasure trove of information that they just simply don't get anywhere else. And look, the reality is what I'm going to be sharing with folks at this workshop, I've spent countless dollars and countless hours out there. That was my role because of my passion for the things that I like to do in life. Then, for me, the real secret is, the real trick is, how do I take 10,000 hours and be able to condense decades into minutes out there? And that's really the thing that I enjoy doing the most. So come join me May 7th and May 14th. All the details on the homepage at TFNN.com. What is it that you should expect today, this evening, tomorrow morning when we wake? Very simple. At this stage here, it's really what, and we're going to take a look at both the bullish and the bearish side. When we take a look at the bearish side, and I say bearish side, I'm just talking about the market moving up or moving down. Inside of the NQ on a 30-minute chart out here, it got to what I like to refer to as the 7th inning stretch candle formation. That's utilizing the Chapman wave. That's counting peaks coming off of the low as the market was moving lower back on Friday, doing it with less relative weakness out there. One of Stevie's price relative strength divergent patterns. I love when that sets up because it tells you that the move is not real. And what happened? The move proved to be not real. Now, look, people will say it was because of China doing the triple R, which means that they just simply were adjusting, the banker rates out there. Some people will say that do you believe that the market knows something or people know something before it's released to the market? Well, guess what? They can't hide because just simply through simple pattern recognition tools, we just look and understand what the emotions of what the market is doing. Same kind of simple tools that I'll be teaching on May 7th and the 14th out there. Now, what's the market do? Makes this beautiful wave pattern. The wave pattern, what's so nice about this one when you get to that 7th inning stretch is that just one tick above it is where your stop is and you're out of the trade. It doesn't get better risk reward. Now, because we've made it, because the market was moving up, in this case here, the NQ, the NASDAQ, which is important to both you and I, was doing it with less relative strength out there. We got a little bearish reversal signal and some confirmation coming into the 4:30 time frame out here. That says that we ought to see price move down to about the 43.80-ish type range. If we see that take place, you won't be surprised. Likewise, if the 44.17 level, if it's trading above that, one of these and I won't say bearish, one of these patterns here where the market should move lower will have failed. And when that fails, it says we're going to see much higher price inside of the markets out there. Over the long haul, or what are the markets trying to do, it's important. That was 30 minutes. Go from 30 minutes, in essence, to a month. And we take a look at the monthly chart this year for the NASDAQ composite itself. It's trying to get above 5,083. When and if it does that, we'll see price move up to 58.31. That's what you should be anticipating. Right now, our markets have been struggling to get over their hurdles out here, whether it's the composite, whether it's the New York Stock Exchange. Whoops, didn't mean to do that. Hit the wrong button. It starts Windows Player out there. I don't know how that works, but anyways, NYA out here. If we take a look at New York Stock Exchange out here, you can see it's right now up against a level of resistance. That price point, 11,282. That's what it's trying to take out. If it can, it says price runs up to 12,827. If we look at the S&P 500, SPX out here, let's go see what level. This is a monthly chart that we're taking a look at. Let's go take a look at this level of resistance. Now, in the case of the S&P 500, it's actually above this solid line here. The solid line is the real primary horizontal trading range number. It's just trying to get above its midpoint. Oftentimes can be an area of resistance, the 2126 level. You get above 2126, we're on our way to 2267. I suspect that's what the S&P 500 wants to do. Each of these are struggling to get over lines of resistance. If we take a look, at the Russell 2000, doing a lot of whoopses here today. I guess that's because of 4 hours of doing radio shows. Now, in the case of the Russell 2000, beautiful looking stock chart. Hey, just look at the trend line coming off of the 2009 lows. How about coming off of the 2011 lows? That trend is still intact. There's really nothing bearish at all here. In fact, when I say nothing, I mean nothing bearish about the Russell 2000. It wants to trade to 1362 out there. Of course, 1350 is its measured move consolidation price range. But, it's not going to happen overnight with regard to getting there. Right now, it's got to deal with that hurdle inside of the 30-minute chart. If we take a look at what's going on inside the Euro, Japanese yen, your friend and mine, it's been pulling back, just kind of moving sideways today. If this currency pair was traveling higher out there, I would tell you that forget about that island reversal and everything else inside the New York Stock Exchange. Its message would be that price wants to move higher because this is the liquidity trade. This is where the markets get their energy from. But even this has been relatively lethargic out there. So, folks, thanks so much for joining me here on the Tom O'Brien Show. Tune in tomorrow, TFNN. We begin our day at 8 o'clock with John Logan. I follow up for 2 hours after that from 9 to 11. Have a safe day, safe evening. Give your kids a hug. Give them a kiss. And I look forward to seeing you soon. Take care, folks.